Candles, fibs, crosses, EMAs. It's the tools of the day trade. Don't be a noob and trade on websites that don't give you BitBoy bonuses. Click the link in the description to get set up on ByBit or Femex and get an insane sign-up bonus for being part of the BitSquad. Leverage trade responsibly, but do it the right way on Femex or ByBit. Bonus details in the links below.
BitBoy Crypto Morning TA. Good morning, everybody. It's November 17th, 2021. My name's Piano Matty B. That is Scaramucci's. This is your Morning TA. A brief glimpse into the crypto markets, where the sun's shining, where the wind's blowing, all the humble opinion of this piano. Zamboni, bringing the data. The FOMO index has dropped to 52 from yesterday's 71, putting us all in a state of market meh. Bitcoin dominance is at 43.5%, 24-hour volumes at 143 billion, and the overall market cap is at 2.57 trillion. Give or take 100 million. So as the crypto market takes a $500 billion haircut off its market cap, let's take a look at the old 4-hour chart. Now let's get this bear flag pattern out and on the table and discuss what it traditionally means. As a continuation pattern of the bearish nature, the textbook projection would be to take its pole and add it to the bear flag breakout. And that's the doom gloom range, 55K-ish we were talking about yesterday. Now that's the textbook execution, which carries a 67% likelihood of playing out. Now here are some data points that give some pushback on this percentage and subsequent textbook execution thereof. We are in a hella oversold range on both the MACD and the RSI. So although trends can dig in and stay in these oversold ranges longer than we can keep our hair from falling out, I like these positions. It's telling us that we are coming to an end to this correction, and a correction is all it is, my friends. They exist. You can't stop them, despite coming up with satisfactory origin stories every time they dip. You have to get to the point where you just accept that it's part of the game. Markets, they ebb and flow, don't you know? Like the pegs that mountain climbers stick in the mountain as they get to new heights. Each one embedded in the rocks below offer them support when and if they fall. If one doesn't hold, well, the next one usually will. Till finally it breaks the fall and we started climbing back up again. So imagine each pullback as a peg in the mountain. Now imagine if we didn't put any of those in and we just went higher and higher. When that correction comes, and it always does, it'll basically be in a free fall, and at that point we'll have to consider the climb may be over. But for now we're just hitting those pegs. Oh hey Peggy, how's it going? Being a market empath and feeling the emotional swings of the BitSquad, I feel like the timeline has exacerbated the tension. And we're looking at the dips, then the clock, then the dips again, then the clock again. The last time I looked at the clock was when I was in high school waiting for that buzzer to ring to go home. And it didn't make the time go faster or the mundane, useless information more interesting. It just made the situation worse, so divorce yourself from the clock. You'll feel better and time is just an illusion. But we'll save that for another video, maybe deep in the bear market. The last point I'll make about time is that it's the only thing we try to kill, but immediately want back once it's gone. So beware of what you wish for and enjoy every moment. Hey Nancy, how you doing? Over on the daily, we've come down to the 50 moving average, or as we all know it, the Rodney Dangerfield of moving averages that gets no respect. And although I think we'll elbow him into the locker a couple times, we'll likely see us bounce in between the 50 at about 58-ish and the 20 up at 62. Now this range is like an echo chamber. Until we see some big moves, it's likely our range for the next little while. But make no mistake, at any moment this thing can and will go parabolic. After all, we're still in an uptrend, and the MACD and RSI are sitting pretty. I mean, last week we were talking about how the RSI and the MACD were dicey and overbought ranges. We had to be careful. Like when the handsome and charismatic Brad Pitt had to ride the old 10 speeds really quiet at the airport in World War Z as to not wake up the zombies. And now that I say that, I realize I never thought twice about the whole zombies getting tired and need to go to sleep aspect of being a zombie. I thought they were like undead insomniacs that really like to brain party with the living. They just like to rock and roll all night. You know what's coming. Party every day. That's right. Digressing, we have a ton of upside on these indicators, like a ton. And I know I'm preaching to the choir when I talk about dips and time and chilling out, because the BitSquad is a community of seasoned market sociopaths. But I'll leave you with this little bit of zombie brain data regarding the RSI. The last time the daily chart had an RSI in this range was back at the end of September, which led to this bike ride from 41K to 66K. So ring those bells, the movie hasn't even begun. So popcorn up, BitSquad, and remember, we're playing the same game as our psychopathic elected lead. That's right, it's the long game. That was the modern dance snap. That's right, it's the long game. So zoom out and have a fantastic day. BitBoy Crypto